Welcome to our channel Brilliance.
Before starting this video, I will tell you the channel disclaimer. As we are not SEBI registered analyst, we are not recommending any buy or sell recommendation. This video is purely for the educational purpose only. So at last you are the only one need to take a decision on your hard-earned money. So at any point of the time, we are not responsible for your financial losses. We are just trying to share our knowledge with you guys only. Let's get video started. Okay, what is stock market? Stock market is not a small thing to explain in this video. So I will try to cover the most of the basic things share market. I will try to tell you the real time example. As we all seen the vegetable market, right? That one we can relate so much with the share market also. There we see in the sellers and buyer. The product is vegetables. Same like that here also we are seeing the seller and buyer. The product is stock. But the concepts are more or less same. How the stocks are getting listed. For example, if I want to start a company called Brilliance and I want to get listed in the share market also, then what I will do is I will go to SEBI, then I will do the IPO process. IPO means initial public offering. Then my company will get listed in the share market. We have two exchange centers. One is NSE, one is BSE. NSE means National Stock Exchange, BSE means Bombay Stock Exchange. After the IPO process, my company will get listed in the one of the stock exchange center, or it can be in the both. Okay, finally my company got listed in the stock market. Then people can buy or sell my stocks. This is what the process behind the stocks. Let's understand the Indian indexes. NSE index called Nifty, which includes 50 companies from the various sectors. Meanwhile, BSE has an index called Sensex. It has 30 companies from various sectors. Why the index are choosing the various sectors? Because if one sector is getting crashed, the other sector can give something better returns. So the market will be in stabilized manner. Okay, now let's see how the people can buy the shares. Whether they can buy it through their bank account. Of course, they cannot buy it through their bank account. They just need a demat account to buy their shares. If you are not aware of what is demat account, please check our previous video. We have explained enough about the demat account. The demat brokers will charge you the brokerage for your orders. Orders means if you are buying or selling your stocks, they will charge you. But the charges are not same for all the companies. Every app have their own charges. As a beginner, we have to check all the brokerage costs, then we can choose our app. How I can get benefited after buying the stocks? By two ways you can get benefited. One is dividend, another one is the stock's price getting increased. Okay, what is dividend? The company is sharing their profit with the stockholders, but it's not compulsory to share the profit with the stockholders. The next thing, the stock price getting increased. How the stock price will get increased? This is purely based on supply and demand only. In simple way, how we can understand is, in vegetable market, the people need 100 kilos of tomatoes, but the seller have only 10 kilos. The tomato price will increase automatically, right? The same thing with the shares also. If the people wants to buy more shares, then the stock price will get increased. Let's see how many stocks are trading in the Indian stock market. NSE has around 2133 stocks and BSE have more than 5000 stocks. So overall nearly we have 7000 stocks are trading in the Indian stock market. Out of 7000 stocks, it's very difficult to choose a stock, right? Very simple. As a beginner, we have to choose a stock from Nifty 50 companies because it won't be more volatile as compared to other stocks. In the stock market, there are two types of people. One is trader and the another one is long-term investor. The trader will get into the stock, they will have their target and they will have their stop loss. If the target hit, they will book the profit. If the stop loss hit, they will exit with the loss. On the other hand, we can see the long-term investors. They will invest in the stocks. If the stock price is getting low, they will buy and they will accumulate on the every tip. And they will wait for the long term to get the good returns. But both are not buying any stocks blindly. They both have different strategies. For example, traders have the technical analysis. They know why they are entering into the stock. Why this is a target, why this is a stop loss. Next, long-term investors. They normally do believe in fundamental analysis. They won't buy the stocks blindly. They know what the stock is capable of and they will do invest on it. So we will post a video about fundamental and technical analysis in further videos, so we will guide you further. It has more segments, it like direct stocks which I have seen so far. Next is mutual fund. It's like the AMC companies, they are doing the investment for us. As a beginner, this is easy to do. The next one is ETF. It's like a segment based. It's like a index on every segment. Not just choosing the particular stock, but choosing the particular sectors and investing on the whole sector. And the final one is derivative trading. That's like a F&O, which means future and options trading. As a beginner, please don't enter into F&O trading. It's far more dangerous than what you think. It can wipe all your capital in a single trade. I can say the famous quote here: the Rome is not built in a single day, but the Hiroshima Nagasaki is destroyed in a single day. Of course, investment returns will be subject to the market risk. But if we stay long, we can reduce the risk. We can make a good returns on the long run. Even though markets are giving good returns in the long run, why we are not aware of it? Have you ever think why we don't know all these things? As a middle class people, we are not aware of stock market. We thought this is for the rich people only. The people who created wealth through the share market, they never taught us. Even our education system never teaches anything about stock market. I think they just wanted to work for someone else only. They never wanted us to create a wealth for ourselves. So I will try to guide you in all the aspects of investment. Let's learn together, let's grow together, let's invest together, let's create a wealth together. 10 years down the line, we will be financially independent for the sure. I can give you the assurance, if you stay with us, you can achieve it too.
Thank you for watching the video. If you are liking this video, do hit like button, do subscribe and share with your friends.